On Friday, the world thought the trade war had hit a legal roadblock. The US Supreme Court ruled 6-3 that the administration's Liberation Day tariffs were illegal. For a few hours, the markets breathed a sigh of relief. But then Saturday came. Yesterday, while the markets were closed, President Trump didn't just ignore the ruling, he doubled down. Invoking Section 122 of the 1974 Trade Act, he signed a fresh executive order for a 15% global tariff on all imports. It is the maximum allowed by law, and while it is set to hit this coming Tuesday, it is legally capped at 150 days unless Congress acts. This creates a ticking clock of volatility that the 98% are not factoring into their trades. As I record this on Sunday, February the 22nd, the Western markets are still silent, but the tariff trade is already the only story that matters for the week ahead. The implications are staggering. We're looking at a fundamental inflationary repricing of the US dollar. In just a few hours when the Asian markets open, we're likely to see an historic scramble for safe havens. Gold is already hovering near $5,100 per ounce, and silver is testing $85. But the biggest moves won't be in the metals themselves. They'll be in the companies that pull them out of the ground. Welcome to Money and Power. Today I'm introducing you to the 2% Club strategy. I'm going to show you exactly why the world's biggest funds are pivoting to mining stocks, and I'll break down the specific math of why these companies are printing more cash than at any point in human history. But I'm going to tell you why I'm not buying today. Most retail investors are going to blindly buy the gap up when the markets open tomorrow morning. That is potentially a 98% mistake. If you want to know how the top 2% of investors handle a melt-up without getting wiped out by the inevitable correction, you need to stay until the very end. We aren't just looking at a stock tip. We're building a framework for a new era of global volatility. So let's get into the data. Why is everyone suddenly obsessed with miners? Because of a concept called operational leverage. Think about it. If you own a gold bar and the price goes up 10%, you've made 10%. But if you own a company like Newmont, the world's largest producer, the math changes. Newmont has managed to keep its all-in sustaining costs, AISC, at roughly $1,500 per ounce. When gold was $2,000, their profit was $500. With gold at $5,100, that profit margin explodes to $3,500 per ounce. That is nearly a 70% margin. This is why Wall Street is flooding into names like Barrick Gold and Agnico Eagle, AEM. These companies are generating more free cash flow in a single quarter than they used to make in a year. And in the 2% Club, we follow the cash. If this level of math-based analysis is what you've been looking for, please hit that like button. It tells the algorithm that you want more strategic content, and it helps us grow our community. But the 2% strategy isn't just about blue chips. To find the real outliers, we have to look at specialists. Take Endeavour Mining, listed on the London Stock Exchange. They've been outperforming the broader market this month, driven by a strong shareholder return framework that includes aggressive dividends and buybacks. Then there's Equinox Gold. They released a transformational update on February the 18th. While the 98% are staring at spreadsheets, the 2% Club noticed the real shock. They've slashed their debt by more than $1.1 billion since the middle of last year. They've fundamentally rebuilt their balance sheet, announced their first ever dividend, and are now targeting nearly 800,000 ounces of production for 2026. They are currently ramping up production at major sites in North America, positioning themselves to produce over 1 million ounces, by the end of the decade. And we cannot ignore silver. Silver isn't just money anymore. It's the high-tech fuel for the AI revolution that the world is running out of. We are currently in our 6th consecutive year of a structural deficit Your AI data centers, solar panels, and the entire EV supply chain cannot function without it. Now we're looking at Fresnillo, the world's largest primary silver producer, and Pan American Silver. These aren't just precious metals anymore. They're critical industrial components for the AI revolution. So, if the bull case is this powerful, why am I staying on the sidelines? Why isn't the 2% Club hitting the buy button today? Because I'm seeing three massive red flags that the 98% are ignoring. Red flag 1, production warnings. Just this last Friday, February the 20th, Newmont shares dipped 2.6% after reporting earnings. Why? Because they forecasted a 10% decline in gold production for 2026. Even with record prices, if you aren't pulling the rocks out of the ground, your earnings have a ceiling. BMO even trimmed its price target on the news. Red flag 2, the sell the news pattern. We're seeing institutional rebalances. Large holders like UBS have recently trimmed their exposure to gold miners. Filings show notable insider sales at these record levels. When the people running the mines are selling, the 2% Club pays attention. And red flag 3, technical exhaustion. On the daily charts, indicators like NEM's 14-day RSI are currently flashing sell signals in some markets. In the United States, gold futures show resistance at $5,150. Buying at the very top of a Saturday tariff shock proclamation is the definition of high-risk trading. The 2% Club doesn't chase vertical lines. We wait for the mean reversion. Now, to get the full picture of how this fits into the broader economy, I highly recommend you watch our weekly financial roundup that we released yesterday. In that video, I provided the necessary stats and prices of the various asset classes and stock exchange levels, and an indication of what may indeed happen this coming week. The link to that video will appear at the end screen on this one, and also I shall place it as my pinned comment just below this video. Watching that alongside this video will give you the macro and the micro view you need to stay in that top 2%. The 2% strategy for this week, therefore, is simple. Patience. I've identified the exact price levels where I want to enter these miners, usually a 10 to 12% pullback from these current highs. If the price never hits that level, I don't care. In the 2% Club, we don't gamble on executive orders, we invest in value. The Tariff Trade is the defining financial story of February 2026. It is changing how we value every asset in your portfolio. We're moving into a hard asset era, and the mining sector is the heartbeat of that shift. But remember, being part of the 2% Club means having the discipline to wait for the market to come to you. I want to hear from you. Are you diving into the big producers tonight, or are you sticking with the safety of royalty companies like Franco-Nevada? Or like me, you're waiting for the 2% entry when the hype settles down? Let's discuss in the comments below. I'm Richard, this is the 2% Club. Stay disciplined, and I'll see you in our next video.